The IRS just released their strategic plan for the upcoming tax year, and a big part of that plan is to increase their audit rates. They have reported that they will increase audits on certain individuals by more than 50%. They're going to triple their audits on certain corporations and 10x their audits on certain partnerships. On top of this, the IRS have been beefing up their audit workforce to add tens of thousands of people, and they are willing to pay generous six-figure salaries to attract the best talent. They are even buying hundreds of thousands of dollars in ammunition, for crying out loud. It is very clear that the IRS is gearing up to increase their audit activity. But what does this mean for you exactly? I'm sure you want to know what your specific chances are of being audited. And in this episode, I'm going to answer that question for you in detail. First, I'm going to walk you through the IRS audit rates for the last tax year and show you the percentage of audits they conducted by income and tax return type. This will give you a general understanding of who they have been focusing their attention on. But then I'm going to take it a step further and walk you through their strategy for the future and how this may change your chances of being audited later. And as we go through this, I will also give you some valuable tips that you can use to help protect yourself from future audits based on my experience as a licensed CPA at mycpacoach.com. So look, I have already read through hundreds of pages of data to help you navigate this as a taxpayer. So please do me a favor and go ahead and like this video below, and be sure to watch until the end for everything you need to know. All right, so it is important for everyone to understand that the IRS has been understaffed for almost a decade. Their budget and staff decreased by 20% from 2010 to 2021, which has resulted in lower audit rates for almost everyone. But in 2022, the Inflation Reduction Act was passed, which granted a record $80 billion in additional funding to the IRS. And in May of this year, the IRS released a strategic operating plan on how they intend to use the funds to, quote, transform tax administration and services, and more importantly, to effectively enforce the tax laws. So let's walk through the level of IRS enforcement that occurred in the previous tax year, and then we can talk about how this may change in the future. So in 2023, the IRS audited about 583,000 tax returns, which is actually less than what they audited in 2021 and 2022. Now, by auditing these returns, the IRS earned $32 billion from additional taxes and penalties, which is why they conduct these audits in the first place, to collect money. Now, they justify these audits by finding taxpayers who do not follow the rules and assessing them additional money in tax penalties, interest, and so on. So if you want to avoid an audit or win an audit in the event that you are selected, all you have to do is follow the rules and file your return accurately. Just take a look at this chart that illustrates the type of audits the IRS conducted last year. As you can see, a large bulk of the audits were related to math errors. These are tax returns that use incorrect calculations to qualify for certain deductions or credits, like the child tax credit or the recovery rebate credit, for example. Now, the next big category is the automated under-reporter, which detects taxpayers who under-report their income. A lot of people don't know this, but anyone who pays you income is actually required to report it to the IRS. So even if you don't report it, the IRS can still easily identify this. So 75% of audits were related to math errors and underreported income, which means if you simply report your income and avoid mathematical errors, you can significantly avoid triggering an IRS audit. But still, your tax return may be randomly selected for a correspondence audit or field audit due to other issues on your return. So let's switch gears and talk about your chances to be randomly selected for an audit based on actual audit data from 2023. So this is a snapshot of 2021 returns audited in 2023 by the IRS. For starters, if you earn between $50,000 to $500,000 in income, your audit rate would have been 0.1% in 2023, meaning you would have had a 1 in 1,000th chance of being audited. But as you can see here, the audit rates increase for people who report less income or no income at all, with 2 to 4 times higher audit rates. And this is because the IRS is a little bit more skeptical about people who report losses on their tax returns or very low amounts of income. For example, someone with $90,000 in income who has $100,000 in deductions would actually report a tax loss of $10,000 on their tax return. And a scenario like this may get the IRS attention and cause them to look into it with an audit. Also, people who take the earned income tax credit were audited almost 7 times more than others, as the IRS commonly sees people trying to claim this credit when they do not qualify. Now, on the other end of the spectrum, people who earn very high amounts of income were audited the most. As you can see here, audit rates began ticking up significantly for taxpayers earning over $500,000 in income. The audit rates went from 0.1% to 0.3 to 0.5 and all the way up to 2.9% for people who report more than $10 million per year in income. And that is just for individual taxpayers. For corporations, audits were as low as 0.2% for corporations with less than $250,000 in assets. But as those assets grow, so do their audit rates. Audit rates were as high as 15.8% for corporations with more than $20 million in assets. Now, one thing I found interesting, especially for small business owners, was that only 0.1% of partnership and S corporation returns were audited in 2023, irregardless of income. So this would mean that these types of returns have the lowest audit rates amongst businesses and even lower than some individuals. So if nothing changed at the IRS, this data would probably reflect your chances of being audited in the future. But things are changing and pretty quickly, unfortunately. The IRS is looking to increase these audit rates even more, so let's talk about their strategic plan for the next decade. All right, so first of all, let's start with the problem the IRS wants to solve by increasing their audit rates. And it's actually very simple. They estimate that they have a tax gap of $683 billion. This is how much money the IRS is losing due to taxpayers not complying with the rules. And it's directly related to taxpayers underreporting their income, underpaying their taxes, or simply not filing their taxes at all. So the idea is that by increasing its enforcement and the rate of audits, they will be able to collect more tax revenue and close this gap. And now they actually have the funding to do this. Now, they claim households and small businesses earning 400 grand or less will not see audit rates increase relative to historical levels. But what historical levels will they be going off of? Remember, audit rates have recently dropped due to a drop of IRS staff. And since they will have more staff, I think it is possible that audit rates could still increase from recent years, depending on what historical average they are trying to maintain. And if you are earning above 400 grand per year in income, then you can certainly expect a significant increase to your odds of being audited. The IRS specifically states that they are focusing on high income and high wealth individuals, partnerships, and corporations. So then, when exactly will this increase in audits take place? Well, they already are. The IRS has recently stated that as of January of 2024, they have recovered $520 million by pursuing high income individuals. And this is just the beginning, folks. It is going to increase even more over the next few years here. For context, look at these milestones in the IRS's strategic plan. Since 2023, the IRS has been focused on hiring thousands of additional agents to even be able to increase their audit rates in the first place. Now, hiring thousands of people takes time, and they are aggressively advertising their open positions to accomplish this. But by 2025, they expect to have enough agents to start using new approaches while going after high income and high wealth individuals at a higher rate, which will continue to occur over the next decade. So look, I do not speculate on this channel, guys. This is for real. The IRS is already doing more audits, and they are going to be doing even more in the future. So to protect yourself, all you have to do is follow the rules and file your return correctly. That way, even if you are audited, you likely will not owe any additional penalties. But remember, tax avoidance is legal. You still have every right to use as many legal methods to reduce your tax by as much as humanly possible. You just need to make sure that you do this correctly, which is why having a great CPA in your corner is recommended, especially if you typically owe taxes when you file your return. And if you need one, just go to mycpacoach.com to apply to work with one of my CPAs today.